Exactly. You have a lot of people excited, and so we'll be watching closely what happens. But we're shifting gears to the topic of today's episode, which is another major investment, the sale of Warner Brothers to Netflix, and then Paramount entered the chat. And so we have this kind of trifecta going on. And I want to start by addressing one of the first comments that I see here from a viewer. Camden McBride says Netflix buying Warner Bros. Should be a really good thing. People are literally overreacting about this. Do you agree with that?
I mean, first of all, just if we're going to talk, let's get the right jargon. It's not actually an investment at this point. It's a full acquisition, right? So it's an acquisition that I would say at a high level explains and addresses, you could call it like the mistake that like big media did with the internet and Google, the search ecosystem, which changed discovery and recovery, but also then YouTube. Right. I mean, you see YouTube and Netflix. We've talked about it. One is evolutionary, Netflix, same kind of programming as TV and theatrical, but in a different user experience. And YouTube, which is just revolutionary in that it has changed the definition of quality. What is it? Celebrity, everything. But so these two behemoths, one in AVOD, ad-supported video on demand, and one in SVOD, subscription video on demand, they've kind of just sucked out the energy from the room. And as much as traditional media still have a lot of IP, a lot of rights, a lot of legacy assets, and they've tried to evolve to also go direct to consumer. Disney did it with Disney Plus. The writing is on the wall. Audiences have shifted to the web. They consume short form video. When we started, our videos were a bit longer than the norm. And, as I say, even disruptors get disrupted. But I think it's largely to say, okay, given what we see happening with Google, YouTube's dominance, and Netflix itself worrying about YouTube's growth, then big media, it's a game of musical chairs, right? And the music will stop. And yeah, what happened was Netflix made a very, very compelling offer for, we'll just say 80% of the assets, the ones that they care about. And Warner Brothers Discovery, which was kind of Time Warner's own history. It started off after a century. It merged with AOL, one of the most disastrous M&A deals of all time. And then it was spun off, burdened with a lot of debt. And then David Zaslav, a very shrewd deal maker, merged his Discovery with Warner. But in the end, it still had to find an outcome and a home, and Netflix to merge. But you have this very, very ambitious young man in David Ellison, son of Larry, founder of Oral, one of the wealthiest people
Oracle.
in the planet, who Oracle. What did I say? Not Oracle. Okay. And so, he has access to capital. He's very ambitious, and he's kind of re-engaging them, saying, wait a minute, our offer was better for shareholders. So why are you taking Netflix's deal? And Netflix is like very confident that that deal will prevail. Mm-hmm. So a little bit of late innings drama and intrigue, which I love, because in another life I would have been an M&A banker.
Yeah, well, we got another question from the audience. Mandatory critical of WatchMojo question. Who cares what WatchMojo's opinion is on this topic? From Multiverse.
Great, Yvonne, bring up the image. So, I mean, look, Michael Milken, one of the most successful investors, he had a brush with the law. He had cancer. He re-engaged. Leave this up for a while. He re-engaged and re-emerged as a philanthropist. He has one of the greatest quotes of all time. The most successful investor is a social scientist. I grew up loving humanities, went into business, was a storyteller, landed in this universe. I started WatchMojo because I understood where the puck was going in terms of trends. When we started Multiverse HQ, so I saw this pyramid, so to speak. I saw that you had, if the top represents super premium, I saw that those guys, the Foxes, the ABCs, the NBCs, would not really embrace the web because of the lack of economic determinism, to quote our friends Marx from the previous show we did on capitalism and socialism and communism. And then at the bottom, you had this revolution where, because of things like mobile phones, editing tools and all that, you had this explosion of user-generated content, to the point that in 2006, Time Magazine's Person of the Year was you, Y-O-U, because of UGC. So WatchMojo was a pioneer, recognizing that there was an opportunity and a vacuum in that middle. And we kind of reinvented what programming looked like. Our music videos looked like VH1. Our sports videos looked like something that ESPN could produce. Our history videos looked like something out of the History Channel or CNN. And we did that for 20 years, and the market shifted to the point where big media got the memo a bit late. And I'm not blaming them. They had no economic incentive to do that. So what you ended up seeing was that pyramid was no longer the case. Like, that pyramid made no sense if you said, well, Disney blew up its business precipitated by COVID, but they blew up their business justement to embrace consumers and go direct to consumer. So what ended up happening is you had companies that had a lot of content invest in distribution, either by acquiring or by launching their own platforms. And then you also had these distribution platforms, these big tech platforms that were now like in this brave new world, the masters of the universe. There's a saying, Hollywood thinks it rules the planet. Silicon Valley thinks it rules the universe. So you had a company like Apple licensing content. You had Google acquiring YouTube, but still being a neutral platform. And you had others that were like, we're just going to get into content production ourselves. So these two spheres started to merge. And you could argue now that this is where we are, that there's no real difference. There is, but there's not as much of a difference anymore between Paramount, Skydance, or formerly Paramount known as Viacom, and a Google or YouTube, because they're all fighting for attention, watch time, mind share, market dominance. So the reason why you care about WatchMojo or not is, for one, we cover trends, we cover the zeitgeist. We also have been telling you where the puck is going, whether it's in the new movies you like, or whether it's tapping into your nostalgia to say, if you like X, you may like this new thing Y. But the people that care about what we say is because they want to know where the world is going. Now, you don't have to listen. You could put your, I'm not being rude and say, put your head in the sand. You could go watch one of the other 10 videos we did on Batman and, whatever. But some people do care about this. And those people are the ones that make these decisions. They're the ones that read what entrepreneurs are doing and what operators are doing. And then they have access to capital and their thesis. So, if you're happy with life, keep doing what you're doing. If you want to know where the puck is going, just open your blinds a bit. That's it. Mm-hmm. It's a free world. This ain't North Korea.
In your view, who are the biggest winners and losers in this change of structure that's occurred?
I mean, the reality is, I hate to say it, losers do historically tend actually to be the stakeholder known as employees, because you don't need two groups of lead lawyers. You don't need two groups of marketing. But that's also just the cycle of life and business. I think that's just why you have to adapt and change. I think consumers could go either way. If you had again, I don't criticize people, but just objectively. So the Arrow and Viacom, the Redstone family, gave the keys to Phil Dolman, who was a lawyer. Well, you kind of anticipated that they were going to take a more bottom line approach. So big movies were not as flashy, and it was more of a cost cutting, bottom line oriented strategy. David Ellison is not that. I mean, his critics could say, oh, he took daddy's money to produce movies, he even acted in some, but I just see passion, so which is what you want. It starts with passion and ambition. So I think if David Ellison were to prevail somehow, that could be interesting, because otherwise media companies do tend to produce less over time. There's always booms and busts, but the long-term trends are that these big companies that, like a tree, have grown fatter and fatter with the rings around the wood. These generally are in shrinking mode. We live in a world where there's an advertising tax that everybody has to pay to Google. There's a commerce tax everybody has to pay to Amazon. So I think if you are a stakeholder that is part of Paramount, Skydance, or Warner Brothers Discovery, that Google's not really going to buy you. So if you have a Netflix, ultimately a platform, but still more traditional than just Google, and now you got Skydance. I mean, that to me, I think the net will be positive. I understand. And yesterday in our editorial meeting, I asked the team, just as consumers, I said, how do you feel about this? It was pretty clear. Most were very skeptical. But I feel that somebody like David Ellison is probably more of a net positive for creativity, let's say. Yeah. But it's also not just, ironically, the 20 years ago YouTube and 25 years ago Google was misplayed. Today, we're now in the era of AI. So my arithmetic says Netflix wanted to buy the rich catalog that Warner Brothers brings, to give them something that, sure, even if AI can create new derivative or transformative, and that's a key distinction in copyright, but let's just set that aside today. But I feel they go, even if, okay, if we own this IP, there's still AI that's an uncertainty. They're effectively bulletproofing themselves from an era where people will, I mean, it's going to happen. It's even happening already, where AI will create stories. And, yes, that's good for Netflix if they have the audience and the resources. But that also means that people could disrupt Netflix. The next Squid Games, the next Stranger Things will probably not come out of Netflix. So ultimately, I think it's both like a very secular industry level game of checkers, but it's actually more of a strategic, overarching game of chess, where they're like, hey, AI is going to rewrite everything. We need to get bigger and better, especially since big tech is only going to get stronger. None of these big tech companies are going to get weaker. Like, it is a bit of a zero sum, but by and large, the cohort known as big tech platforms, they're going to get stronger.